Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going to be talking about the $7 trillion China real estate bubble that's brewing since pretty much last year, but it's actually starting to intensify. This is a presentation that me and my research analyst Joe Consorti put together. If you don't follow Joe, check him out on Twitter. So what is going on right now? So Chinese people are refusing to pay mortgages. So essentially, it's common for homeowners in China to start making mortgage payments on new properties before they're even finished. These are basically payments funding the construction, almost like in the United States, how we have construction loans for builders, and those funds are typically released in phases throughout the project. However, many projects are facing delays in China. So what we're seeing is unfinished projects sold by defunct real estate developers or people that are actually going under potential default. We've seen that with Evergrande, which we'll get into later in this presentation. So you can see in this slide here, these are the top 5 provinces where they're having these boycotts on these loans, and it's actually springing up all across eastern China. The bigger the bubble, the more projects affected. The biggest one is 40. The second biggest one is 10, and you can see all the smaller ones sprinkled throughout. So this actually equated to about 10% of properties sold last year, with a nominal amount as much as $297 billion on 300 plus protests in 90 different cities. So to put this into perspective, the Chinese mortgage market is worth $7 trillion. The boycott is on basically 4.2% of it. So let's take a look at one of these specific developers. This is actually Evergrande. If you guys remember, a lot of people were doing videos on the Evergrande potential collapse. This was maybe like 6 to 8 months ago, even though this has been brewing for over a year now easily. So this is the big property crisis. Evergrande is actually one of the largest Chinese property developers. I believe it is the largest property developer in China. They have $300 billion in debt. So right now they're actually dodging outright default, but they are missing payments and inching closer to it. And the collapse of these developers could actually lead to a loss of 250 million Chinese jobs. Okay, that would be huge. And we're going to get into why that's important for us. You may be thinking, hey, Marco, I'm, halfway across the world in the United States or in Europe or, wherever you're watching this from, but this will affect you, and I'll show you why. So this is why Evergrande crisis could be worse than the great financial crisis in the United States in 2008. So typically, these developers, actually residential real estate makes up 30% of China's GDP. Okay, this is absolutely huge. The Chinese property market is likely the largest asset class in the world. So if we take a look at this chart, you can see that this dark blue bar right here is residential property. You can see that the medium blue is fixed income, which are typically bonds, annuities, things like that. And then light blue is equities. These are stocks. Now look at that compared to the United States. United States, dark blue is right here, which is residential property. Fixed income is actually the largest market. And then we have equities, which are stocks right here. Then you can compare that to Japan, UK, and Australia. However, this boycott contagion is spreading for home buyers to suppliers. So it's not just the people that are buying the homes and the developers that have so much leverage right now. It's actually spreading to the suppliers. So you can see here, some suppliers to Chinese real estate developers are now also refusing to repay bank loans because of unpaid bills owed to them. This is a sign that the loan boycott that started with home buyers is now starting to spread. And the source of this is Goldman Sachs. So why does this matter? So if you look at Chinese liquidity, it actually moves global markets and global economies. Everything is made in China, you guys. United States doesn't really make anything anymore. We are a service economy. Yes, we can create things with engineers from overseas that become U.S. citizens, but things are typically made in China. Your iPhone is made in China. Yes, it was designed in California, but it's made in China, okay? So the world business cycle, this line is in orange, and then you can see the China policy liquidity index is in blue, and you can see how they're somewhat starting to be tighter correlated later on, basically since 2010 and on. If you look at it before, I'm not really seeing a huge correlation there, to be quite honest. Some of it is there, but it's getting tighter and tighter as time goes on. So as long as the People's Bank of China liquidity deteriorates, we're going to see a slowdown in world business activity. A Chinese real estate collapse would affect the entire world, and Chinese construction and home sales are 25 to 30% of GDP, as we established earlier. So let's take a look at this situation and why it's quickly deteriorating. So this is because of lockdowns is what we're guessing. If you take a look at this, I should have put a little Corona bottle right here, you know, the cerveza that I always talk about. If you still haven't gotten that joke yet, I don't know what to tell you. Maybe it's not that good of a joke. It's not even a joke. I just can't say it because of YouTube. But anyway, we're looking at the second lowest real GDP growth ever since 2000, okay? So this is going back all the way to 2000. This is China real quarterly GDP, annual year-over-year percentage change. They've had steady growth all since the early 2000s. 2008 affected everybody. That was pretty much a world global crisis. And then it's gone down, 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 down. Cerveza exploded back up, and now we are back down at just 0.4% increase in GDP year over year. So what does this cause? This causes wealthy residents trying to flee, taking their wealth with them. This is no different than what's happening in Russia and Ukraine. If you know anything about the Vancouver real estate market, it's a lot of Chinese money in there. That's why home prices there are absolutely inflated. Same thing with Toronto, same thing with New York City, same thing with Australia. A lot of this money is leaving their shores. So this foreign outflow from the Chinese government bonds hits a record in June. And what is happening now is these banks are actually making a proposal, or government's making a proposal for banks to forfeit their $4.6 billion in mortgage interest income, which will affect these Chinese banks. So how can you position yourself? As always, I try to create a scenario where you benefit from these things. That's the whole point of watching my channel. So I'm not a proponent of this. I'm not a proponent of Chinese equities at all, to be quite honest with you. But if you want to go into this arena, common sense would tell you to watch Chinese bank stocks. So the average exposure to property, including mortgages, is 17% across Chinese banks. I believe this is according to Goldman Sachs. And then there's a potential opportunity there. So you may want to take a look at that. Again, I don't touch Chinese stocks with a 10-foot pole just because of their accounting practices and things like that. If you want a brief history of that, take a look at Alibaba, take a look at Luckin Coffee or Lukin Coffee, however you want to pronounce it. Just Google those two companies. So anyway, number 2 is REIT fire sale may be coming soon. So if you guys remember like the Greek debt crisis that affected the entire stock market, that was in the early mid-2000s. China blowing up their real estate market could be a potential opportunity for the United States real estate market to be cheap as well. What we're talking about is not necessarily residential, but it could be REITs, so real estate investment trusts at a discount. Again, I don't know if it'll affect it that much. I think we're in an overall everything bubble, which I've made videos about, but you may want to take a look at REITs as well. Number 3 is accelerate China's shift away from the U.S. dollar. If you guys have had your head in the sand over the past 2-3 years, what we see the BRIC countries doing, Brazil, Russia, India, China, South Africa, Argentina even is trying to get into the BRICS now. They're searching for a safe haven backstop to the U.S. dollar and the petrodollar system. BRIC nations may accelerate their switch over from the dollar standard and the dollar being a global reserve currency. Okay, so let's get into my thoughts on this. So I worked in commercial real estate. I worked for a boutique real estate development firm. We owned about 750,000 square feet of office space and a couple other different property types and also a couple hundred units of multifamily. I worked in commercial real estate lending. I have experience in commercial real estate in the United States. Do I have those connections in China? No, I've never developed anything in China. I don't know anybody that works in real estate in China. So the reason I say that is because I can only tell you what I would do as an American person, what may potentially cause harm to my portfolio because of what's going on in China. So the example that I would give you, which I mentioned about a minute ago, is the Greek debt crisis. That affected everyone's portfolio because everything is financialized. So when Greece defaulted on their debt, that affected global financial markets, just like 2008 when America had their great financial crisis, that affected global markets because everything was financialized together. So you had foreign nations, pension funds, buying dog crap products in 2008 from investment banks like Goldman Sachs, Lehman Brothers, et cetera, so it caused the whole thing to crash. This is probably more China specific, but it may be a Greek debt crisis moment is what I'm trying to say. So what do? You diversify. You can diversify into many different things. Some people say diversification is diversification. I don't believe that because I enjoy looking at my net worth as a pie. My slices are just different assets of different things. It could be crypto, it could be Bitcoin, it could be real estate, it could be bonds, it could be stocks, it could be whatever. Number two is, what do you think is causing these delays? Is this a global, logistics problem, which we've been seeing in the automotive market? Is it supplies? Is it too much debt? Is it Beijing telling, hey, developers, you can't be so over leveraged as you have been for the past 15, 20 years? That's going to have to come to a halt at some point, because that is what's happening right now. What do you think is causing this? Is it Cerveza? Is it global supply chain? Is it government action? What do you think is causing this? So I'll leave you with that question on mind. Please answer down in the comments below. I'm excited to say that my school, Whiteboard Finance University, is almost done. I'm in the process of hiring professors for each subject matter. We're going to be talking about real estate, macro, digital assets such as Bitcoin and crypto. We're going to be talking about stocks. We're going to be talking about options, dividend stocks, ETFs, index funds, pretty much the whole gamut on how to help you become wealthy. So if you want to sign up for the waiting list, check out the link in the description below. Again, that is my school called Whiteboard Finance University. You'll be getting access to me, everything I'm buying, selling, live streams, Q&A, all that good stuff. If you enjoyed this presentation, give my research analyst Joe Consorti a follow. It's at Joe Consorti at Twitter. And as always, have a prosperous day. Let's see what my wife has to say about Chinese real estate.
Hello.
Hey, can you hear me?
I can. Hello.
What are your thoughts on the Chinese real estate bubble?
Chinese real estate bubble. I have no idea. I know nothing about it.
What do you think it is?
I have a feeling that real estate in China has significantly increased as well.
Increased?
Yes.
Okay, that's a good guess. What do you think is causing this bubble?
Inflation?
Could be. Well, what's really happening is that people are prepaying mortgages or starting to pay mortgages on property that isn't built yet, but the delays are really, really, really long, and people are starting to boycott it and saying, hey, I'm not paying these mortgages anymore.
I don't blame them.
Yeah, what would you do if your house was under construction and it took forever and you were paying your mortgage already?
I would say, hey, I'm not paying my mortgage because I ain't living in the house yet.
That's right, buddy.
That's right, buddy.
All right. Thank you for your insight.
No problem. Goodbye, Whiteboard Finance.
Okay. Bye, Beebs.
Bye.
Bye. Okay. You heard it there first from our international correspondent, my wife.